Hi, everyone. Welcome back to the Mortgage Heroes Weekly Podcast. I'm Andy.
And I'm Will.
And it is just the two of us today. And we are going to do a quick Thanksgiving, what are we grateful for? And then we're going to talk quickly about portable mortgages, a brand new thing that is making the rounds on the internet and all over housing and real estate headlines. So we're without Brian today.
Unfortunately.
My first gratitude for the Gratitude Show is that he's not here getting us sick. Thanks, Brian, for staying away while your kids are unwell. But we hope they are better.
For that. I think we should talk about portables first,
You want to do that first?
Yeah.
All right.
Let's go. Because there's a lot that I'm grateful for, and I just figure, why don't we share that with our audience? So.
Okay, so you want to do portables first?
That's it. Let's go with the portable mortgages.
Okay, so first let's set the groundwork for what is a portable mortgage. So the idea and the concept of a portable mortgage is that it would allow a homeowner to transfer their existing mortgage, including the interest rate, the balance, and the terms from one property to another when they move. Now, there are obviously some pros and cons to this. There's some structural challenges potentially. I'm going to say the word inefficiencies to already kind of cast my bias out there. The goal is to reduce the lock-in effect, which we've been stuck in for years now.
Yeah.
Everyone that
refinanced
it 2.25 and all that, they're locked in. They don't want to refinance. They don't want to move, and it's stifling our supply.
Correct.
So this is an idea of maybe, well, how can we allow people to move between homes and keep their amazing financial structure that they have in place? So now,
the crazy thing about it is we've already had something similar, but that's called an assumable loan. And so people go out there and they put their houses on the market, especially when they've had a 2%, 2.25%. It just puts you in a favorable position to be able to afford that property. And so a lot of sellers just say, hey, I'm getting ready to move out of here. I'm quite not selling the property, it's sitting in the market. So I'm going to do, I'm just going to put it out there and say, I have an assumable loan. Somebody come over and take over my payment. You're going to pretty much take over the same terms and conditions of that current mortgage that you have. And so what we're seeing, and this has been something that's not new. It's been something that's gone on forever. Yeah, as a matter of fact, the mortgages have an assumable clause in the document when you sign these final loan documents stating that this is something that you're able to do and have been able to do for many, many years. I know it's a newer thing because interest rates are at a historical low at a 2%. Most people will love to have that interest rate today. But what happens with that assumable, what we've been noticing, the nuances of it is bridging the gap. So for instance, if a homeowner owes $500,000 and that house is out there for $800,000, that gap of $300,000 needs to be bridged in one way or another. And most buyers don't have a $300,000 down payment to cover that.
Yeah.
And so that's where the we've been getting caught in the nuances of it. It's like, who's willing to come in that second position?
And if I can go back one step, I just want to make sure I paint the picture for people that the difference between assumable and the portable mortgage would be, let's go with you as the homeowner.
Yeah.
You have a current loan, let's say it's $500,000 and it's at 2%. Okay. Now, if I want to come and assume your loan, I'm going to qualify for the loan that you have, and I'm going to get that $500,000 loan at 2%, and I'm the new borrower.
Yeah.
In the portable scenario, Memo has a $500,000 loan at 2%, and then when he goes and buys a brand new house, his family and his loan go to the new house too. So the other buyer that's buying his house is not assuming that loan. I'm getting it at whatever I'm getting at market rate. So the concern, I think, is that first of all, the gap is a big issue.
Huge.
What do you do? So what do you do when there's no down? How do you make up for it if someone can, buy your house? It's on them, right? I mean, I guess it's on them because if you are portable and you've already moved to the other place, well, you're fine, you're set. But that means that a buyer coming in behind you to take your current established home, they're going to have to do their own qualification, which still comes down to an affordability issue. So It doesn't help new buyers at all. It only helps existing buyers or existing owners. Yeah. And then, so really what I, on the surface level, without a lot of deep dive, is seeing that this may help tick up existing home sales among existing homeowners, but not existing home sales for new buyers.
For new buyers, exactly.
Yeah.
Exactly. And here's the other thing. So let's just say I do have $500,000 debt, and now I'm looking at a house that's, because property values went up since when I got that mortgage in 2020, 21, right? Now that mortgage during that time of 2020 to 23, we saw a lot of areas that increased in equity anywhere from 20 to 40, 60%. So if I'm still buying in that area where values went up by 40%, I'm not going to buy that same home for $500,000 anymore. Now I'm going to have to buy a home, I'm going to say closer to $900,000. So how am I going to fill that gap? I can no longer port that mortgage into that because I can only take what I'm borrowing currently.
Well, yeah, and I think the idea is that your equity goes with you too, but your equity plus whatever down payment you is to make up to make up that difference.
Yeah.
So there's still like that part, and this is us also kind of discovering and sharing at the same time. Like this is one of the systematic problems that's going to happen, because if you go and buy a place that's more valuable, but your mortgage is inside of a current pool that has an estimated value that's all portfolioed, well, if that is, let's say, not stripped out necessarily, but now if your mortgage gets over here in pool ABC,
yeah,
and then you go and take your mortgage over here to this new place, well, you're still in pool ABC, but the collateral connected to it is a lot higher.
Yeah.
Now, then that collateral makes there less risk over here in this portfolio, maybe in that scenario, but that's not the only scenario.
Yeah.
It's not that you're only going to be doing move up. So I think there's a lot of like sorting out and figuring out to do. Some of the pros that I was reading about was that it could unlock mobility for homeowners.
Yeah.
But again, current homeowners, that's going to help them, not going to help anybody else. They can keep their low rate. Okay. They're also assuming that people are going to want to stay in their house, which they may not want. I mean, they're going to want to move, and a lot of them are just staying put because of that. Also, remember, back when people were doing these really low refinances, they were getting HELOCs or using cash to do expansions on their homes, build an ADU, convert the garage, put the second story, redo the yard. So there's a huge percentage of these people that have already done upgrades to their house too, that they love for the intention of staying there long.
Yeah.
So I think there's that going on. And again, I'm going to go back to the securitized part of this. I think in one hand, it might help with the reducing risk of a basket of funds connected to mortgage-backed securities, but that's if and only if that new purchase collateral is worth more, it's newer, bigger, larger, that kind of thing.
Yeah.
There are definitely some downsides.
No, big time. And we're going to see if even investors even like that. Most investors probably won't even want that. So that's another challenge in itself.
So the thing I think that is going to potentially be the biggest issue is on the back end of the mortgage business. Is all the securitization and the collateralization of assets that allow banks to lend money and then get Fannie and Freddie to stand behind it and get Ginnie Mae to stand behind it. And you can do your FHA loan and your VA loan. All that's going to have to be like rewritten if this move is allowed. This move then creates a cascade of other things that have to happen structurally and infrastructurally to even allow it. It does not help first-time home buyers, so that doesn't help at all. That doesn't help our affordability issue at all. So I think there's a big negative there.
Yeah. The other thing with first-time home buyers being that you are selling, you sell this property, just imagine now you could outbid a lot of these first-time home buyers. That's the other
and that drives up home prices again.
And then how does that bring equality to any of this situation?
Yeah, I can see, like, if I'm getting really super pessimistic, I can see where it actually locks out buyers, right?
Exactly.
Because you know, if you're at 2% and you want to go to 900,000 now, well, now you can. Yeah. Like you can go there because I'd have to, if I want to come and buy your house. You're saying maybe it's worth 800. If I buy your house at 900, well, now you've effectively made enough money to go get a house at 900.
Correct.
And go and take that down.
I mean, it does sound good that you can take all that equity, avoid the capital gains because you're transferring all that, that equity into that new property. Yeah. That's a huge benefit for a seller. Huge.
Yeah.
So that $500,000 here, being married and not paying capital gains on that, that's huge.
So I have a. Before I give you my hot take, I guess I should ask the question: who does this actually help?
It's just the sellers. It's really just helping the sellers. The sellers are going to make a better decision getting out of their current property, so that they can get into another. But it's not, for me, I don't see a huge benefit to a new buyer.
You know what I would like to see? and it's kind of a portable and assumable kind of situation.
Correct.
I'm saying a hybrid one. I'm about to pitch something to you. This is my hot take. I think we should do a portable, assumable kind of thing where it's next of kin can assume the loan if they qualify for it with the current loan value and the collateral still in place, the house itself, and they can keep that loan like a regular assumable, but first of kin. And then
I see what you're saying.
You see what I'm saying? It sounds like it's just a normal assumable loan, but not all loans are assumable.
Yeah.
Unless I'm mistaken, right? No, not all loans are assumable. Like VA loans, mostly is what we're talking about.
Yeah, well, VA, it is assumable. FHA is assumable.
Yeah.
Convention, I'm not quite sure, but I don't think it has a assumable clause.
No, I don't think I've even seen the conventional. It's assumable. So I was thinking VA when you were talking about assumable loans earlier. But the reason I'm saying this is because one way or another, the market always figures it out. The agencies figure it out. It sounds like I'm giving the pat on the back to the government agencies because I'm kind of and I'm not. Some of the things they do by policy, by force, you must do this or else. So ultimately, this comes back to me for like the creativity in the market. Whenever the market gets stagnant, whenever we just we screech right in our tracks, the market starts trying to come up with all this stuff to figure out how we can get unshackled from the situation. And this is just like the latest desperation attempt to try to figure something out.
It really is, Andy, because I mean, we're seeing everything against us. Normally, when we go back to the mortgage meltdown, we saw unemployment increase. Therefore, there was a lot more foreclosures going on in the market. And these are things that we're starting to experience. The unemployment rate's going higher, but now we're seeing inflation is higher than, and so the other thing is, how come home prices are still staying steady? How come, and in some areas, they're still going up?
Yes, stubbornly high.
Yeah.
They're staying stubbornly high. The thing I was thinking about, I just wrote this down while you were talking there. It just dawned on me too. I'm like, wait a minute. If you do a portable mortgage, and you buy a house for $900,000, your insurance is probably going to be different.
Absolutely.
And your taxes are going to be different. Also, here's the other problem. If you cross state lines to a place that has a property tax that's like a base fix, like San Diego, it's 1% plus.
Yeah.
But then you go to another state where it's changing every year.
2-3%.
How do you figure out what your DTI is at that point? You have to like recalculate all sorts of different things financially to make amends for that.
Yeah, and you figure it out based on the based on the property tax rate that there currently is at that fiscal year.
Yeah. The difference though is like, when someone moves to Pennsylvania, you're underwriting them and approving them for their new purchase with all those rules that Pennsylvania has. But if you have a portable mortgage, you say, "Oh, I'm just going to take my mortgage from San Diego to Pennsylvania." Well, it's not. The rules aren't the same. And so then what risk is there to the lender or the bank or the person backing it based on that too? Yeah.
I think all you're doing is really you're taking just the interest rate really and your capital gains or the equity that you have. You're just porting that essentially. And then you got to obviously comply with the regulations that they have as far as the property tax, what your current insurance is going to be, et cetera, for that. So those things will increase. It's just now the underwriting. How are you going to underwrite all that? And that's where it's going to be the tough side. How are we going to get an AUS approval on that, or DU or a GUS approval, whatever you're going, if it's USDA. So you have all these challenges that have to go behind it.
Yeah.
And that's where, but yes, I think this calls for desperate measures from their government.
Desperate times call for desperate measures, and I think this is no exception. I definitely agree that there's definitely an equality problem here. I don't think that this. Here's the funny thing: we have like housing equality rules, and I feel like this one is like this idea is like laughing in the face of those a little bit.
But it is, Andy.
It's like, you're in, you can afford to stay in. If you're not in, sorry.
Exactly. And then this is going to cause home prices to go up as well. If you really think about that, if they have a 2%, 2.5%, well, their affordability is far greater. And therefore now the home prices are going to offer higher than that. And so these things, again, it becomes an inequality. It's like you're not fighting a true freaking a good battle with somebody. It's like this, the seller just has all these weapons and tools and the new buyer just doesn't have anything,
Well, two things from me. If you know more about portable mortgages or what's being proposed and what we're talking about here today, I want to know about it. I'm very curious because to me, it's like my head opened and I unleashed all these layers of complexities and potential problems. So that's kind of part A. And then part B, if there's another side of this that we're missing, that maybe there's a silver lining that we're not catching on to, like many things, we've been around this industry for a long time, and things that are well-intended often have consequences that are also unintended. So it's well intended on the front side, and there's unintended consequences on the back side. And this seems to be just another one of those things. So I know it's very hypothetical and all that, but that's kind of where I'm at.
No, it's true. I do like that they put right here the cons for it, right? The operational challenges, title, escrow, service management, risk management have to go through. It's just going to bring all these challenges.
Yeah.
So, I mean, like anything else, when you first start it, you're going to have so many challenges. You have to progress, as you're moving forward, as you're closing more transactions, you'll have a better understanding, and then you'll fine tune things. But it's going to be very challenging.
Yeah, I think I'm more on the side of dislike than like this at the moment. But again, I'm to the audience, I am open to hearing what I should be liking about it that maybe I'm not thinking about or considering. It's new enough that I think there's plenty of time and on-ramp ahead of us to sort some stuff out.
Yeah.
Maybe there is something good here that I'm just not seeing.
Exactly. And I'm with you. If there was something good from this, then I agree, go for it. Yeah. But I don't feel this is like the 50-year mortgage, and this, I feel confident it's not going to pass through.
I think this is going to be a really tough haul.
It's just not going to happen. We're very good where we're at. We want people to pay their homes off. We want them to build this equity, this risk management asset that they could have, right? For long term. It just looks more, it looks favorable.
Yeah. And I don't want to end on that note. I know it's kind of a short topic today. I don't want to end on that note. I want to talk about some good stuff because we're, airing this episode right before Thanksgiving. So Memo, why don't you take a minute and tell everybody what you're thankful for in 2025 so far?
Yeah, I wrote a few things that I was grateful for. Obviously, my health, it starts there. And so I'm just grateful that a little over 2 years ago, I met up with my buddy Mike, and he took me underneath his wing, and he just, got me pretty much coached up and got me into a different habit of going and working out and investing in yourself, and so days that I feel tired and lazy, don't want to go, my head, my subconscious, how you have that little angel and that other devil, the little angel just said, dude, what are you going to do? Go back to sleep and waste time, or just get up and get going? And then think about when you get out of the gym all the time, how you feel. And you feel nothing but good things. It's like your mind just is thinking better. So I've been looking at before when I would work out, how does my body look? Now it's how does my mind work? How does it feel? And I just like feeling that, because then I have a better approach to the day. And then I just I have a better day with my family and my workers, and not my workers, our co-workers, our partners, and our clients, which is most important to me.
Yeah, that's awesome. So mine's kind of a general big topic. It's the idea of contentment. Finding contentment in what you do, who you're around, how you're spending your time, how you're spending your money, where you're doing things, and who you're with. And this year has just been such a great year of contentment for me, and also for Jen and for the girls. A lot of great things to be proud of this year. I mean, you guys don't ever see our daughter Caitlin, but she's the one who runs the show behind the scenes. Like everyone thinks it's me, and you guys think it's me. It's not. It's Caitlin. Yeah. Caitlin does a fantastic editing. She's been killing it this year, and I'm just super proud of my girls. Jillian just finished high school this year as well, and Claire's in her sophomore year, so I'm super proud of all the girls. But we found contentment in our lifestyle, and contentment in the way we are interacting with each other, in our relationships, and it also, and this is on the heels of a conversation we were having recently, it doesn't mean that we aren't chasing down dreams either.
Absolutely.
It's not like my motor's off and the flame has died. Like, no. I still got all those dreams, but I'm content. I'm happy with life, and I'm happy being here. I'm happy doing this show. Yeah. I'm happy doing all the shows we do here. We've had some great guests this year on Friends of Mortgage Heroes. So I'm super grateful for you guys. And also the other thing I want to say is, and this goes overlooked a lot, we have had some just very complimentary Google reviews this year. We've had some very difficult situations, some like once in a career type problems with certain things, and they've been overcome, and people, even when you want to be impatient, had to be patient on both sides of the deal. So thank you guys for understanding that and just hanging through and enduring those challenging times, and helping us continue to help more veterans and active duty military, because they look at those and they see, oh, this experience was this way or that way. And your voice matters when it comes to us being able to continue serving other people in this way. Yeah,
going in that note, that was one of my other things, is just being a student, right? I'm just glad that I'm not done growing. that I still want to learn, especially now with the new tools that we're getting with AI. I'm so grateful for all those things. Those things help us just cut down on some of the time that's being spent on tasks that aren't required to do that. And at the same time, they give you, when you're prompting it, it's giving you better ideas of how to conduct business, how to approach things differently so that your clients, your family, yourself, you benefit from that. And so those things are things that I do enjoy and I do every day. So when I go to the gym, I put the headphones on. I'm always constantly figuring out how I want to improve myself. And I thank the man upstairs for that. I'm grateful every day for that, and it's just great to know that, okay, you're going to go step in the gym. Not only you're improving your body, you're improving your brain, and you're listening to the right things, the things that others are going to benefit, but the benefit starts within yourself. So I'm just grateful that I'm looking at that. And then, not in specific, all these things aren't in specific order, is the family, right? The family that's always there to support you. They're making the sacrifice. When you're at work and when I go to work, I put 100% of my time into work.
All the time. Yeah.
That's where it all goes. Also, when I go home, I put 110% there, because I understand the sacrifice that they made as they were younger. I have 5 boys, now I have the grandkids, and I'm just like, how do I pour all this love and energy to them? And when I get home, like, how do I just stay there, giving them my full attention?
Yeah.
And those are things, because you're not done growing, that's why you start thinking about those things, and makes you and helps you become better.
Yeah. I think it's so awesome watching you be a grandpa. And for those of you, there's no way you would have seen this unless you follow me on Instagram, but for those of you that missed this, earlier this year, I went down to our original office space down in San Ysidro all those years ago, back in 2005 when this whole thing started. So I'm going to put that at the end of this video just as a contrast from where we started and what we're doing now 20 years into this whole endeavor. So congratulations on
thank you.
hanging with me all this time. I love you dearly.
Yeah.
And for those of you who didn't know us 20 years ago, we're going to end this show and you'll be able to see real quickly where our old office was and where our humble beginnings started. So thank you all for watching, and we'll see you again next week.
Yeah, thank you, and happy holidays and happy Thanksgiving.
I'm down here today at the original location of our office before we moved into the Mortgage Heroes headquarters in Eastlake, right here, Suite 207 off of Border Village Road in San Ysidro. This was our temporary office while we were waiting for our place in Eastlake to get finished, all the way back in 2006. It was actually a record store and a music store before, and it goes all the way over here. It had desks over there, and it had offices in the back, and then it was probably maybe 1,200 square feet or so. So I was down here today visiting another local business that I'm doing a little bit of work for as a surprise. And it's right around the corner. So I thought, yeah, you know what? I'm just gonna go back over here to good old Border Village Drive and check it out. Look at that, Border Village. We used to come down here every single day, 19 years ago. That sounds like a long time ago, and because it is, and we're getting old, but man, this brings back some really fond memories.